the economy, the politics, the real estate. It's doom, it's gloom, and it's boom, but not boom in a good way.
Patrick, on this episode, we're talking China, we're talking trade war, we're talking condos, we're talking consumer confidence, and how this all impacts real estate investors. Ladies and gentlemen, welcome to episode number 64.
Is it doom, is it gloom, or is it boom? And I'm talking boom, as in blowing up. Like, subscribe, comment. How do you see what's going on in the world today, politically, economically? Let us know. We're going to talk about it. Let's rein it in.
Okay, Patrick, you talk about doom, you talk about boom, you talk about gloom. Which one is it? Where do you stand right now? And which topic do you want to get into first?
Well, we're going to talk doom, gloom, and boom. And sadly, the boom isn't in a real estate boom in a good way. It's boom as in many things are blowing up. I've recently had conversations with, probably about a half a dozen now, very accomplished and experienced realtors and Vancouver, Toronto. And they are literally using words like abysmal, meltdown. Where is this all going? And so when you look at what's happening in the real estate world, short of Alberta, and we can get there, it's not a good picture. You know, we've got the dog crate condos in Toronto. We've talked about it many times. It is literally melting down. There is no good news in that market. But overall, here's the thing about it, JG. In this particular, what we call boom, where real estate is blowing up, there is some epic opportunities for investors. And we want to talk about that. But let's look at what's going on economically. We're seeing unemployment go up and it's going to continue to rise. There's lots of lag. And the only jobs that have been created recently, guess what? Public sector. Gosh. Now, some of that, by the way, public sector was through the election. You know, the government brings in a bunch of people to support it. But that makes it even worse. The reality of it is the numbers are all skewed.
It's temporary.
And it's all temporary. But the bigger thing is we go back to it often, which is we're just continuing to be non-productive. Housing was what was floating our economy to a large degree, and consumerism, and both those things have shut down. So that's the doom gloom. That's only part of the doom and gloom. And then, of course, the real estate boom, as in it's blowing up in a very bad way.
No, well, I want to talk about this, Patrick, because this particular graph here that I'm showing on the screen is I found very, very interesting for a couple different reasons. We've known for some time, you and I have talked about that, where there's this kind of widening gap. There's the public sector is growing faster than the private sector. That is not necessarily a great thing. It just means more and more and more people are being employed by the government. Not the best thing from yours and I's perspective. We would rather see the private sector growing faster than the public sector. However, what's surprising to me is the self-employed and how that category is literally treading water, it decreasing 1%, increasing 1%, 0%. Like, I really felt like since COVID, I was under the assumption that a lot of people went into entrepreneurship, but as you can tell, they didn't stay in entrepreneurship. They didn't stay self-employed. The data is clearly showing that whole section is not working very well right now. And man, that sucks. I mean, I'm so passionate about people being self-employed and creating businesses. I hate that this graph looks like this.
Well, I think that the private sector is also about business and entrepreneurs. What you're looking at self-employed, you're looking at those, one-man armies, solopreneurs. And yeah, that surprisingly hasn't grown, or at least it's not showing up in the charts. My impression, like yours, but there's a lot of people doing side hustles and doing that kind of solopreneur gig to make extra money and or make money, because layoffs are escalating. And I think we're going to end up seeing that number grow, is what I'm suspecting. But back to public sector, this goes back to the politics of things and just the way Liberal NDP government runs and how it rocks and rolls. Will Carney make a difference? I don't know. I'm not optimistic. We'll give him some time. He is our prime minister, but I don't like the message and the propensity for government to be really running our economy. I don't know where we're going to go with all of that. So it's all to say this, that we see unemployment start to rise. We're going to see it continue to rise especially in Ontario, to a lesser degree in British Columbia. because a lot of the construction of building homes has really shut down, and the math doesn't work. You can't make a project pencil anymore, JG. You're doing it from, as a small developer in your hood. You've gotten very good at looking for deals, finding deals. You've got a system in place. You're renovating. You're doing ADUs. You're being very innovative and creative in what you do. By the way, that's the cool thing about small business. That's what they do. They hire people and they drive economies. Far different than what happens with government workers, by the way. But it's all to say that, there's lots of opportunities that's happening out there, but there's so much bad news economically that I think people are just totally shutting down. That's
The consumer confidence, Patrick, we called this. We knew consumer confidence would bounce back the minute the election, didn't matter who won the election. The minute the election was final, we knew consumer confidence would bounce back, and it has, which is a very good thing. That's good. That this part's a good thing, but small business confidence is certainly not bouncing back. My gosh, it's at an all-time low.
Well, okay, let's slow down a little bit. The consumer confidence ticked up. So, okay, we finally have a prime minister. And by the way, they're not even going back to parliament yet. I don't think they're going back till September is what I think is what I recently read. But I mean, like, who's leading the country? So that's a whole different conversation. Meetings with Carney and Trump. I mean, how did those go? It looks like Trump did a pretty good job of making Carney look a little dumb, given that the day before Carney's, doing lots of saber rattling and, it's like he's going to run the show with Trump. Trump owned him through that conversation. Carney was good, far better Carney than Trudeau. So that was good news. But consumer confidence ticked up. And then we look at business confidence, or, that, of course, has come down to an all-time low. People and small business sentiment is just crashing. As a small business owner myself, I'm noticing the slowdown. And it's an interesting time, that's for sure.
Now let's dive into, though, Patrick, and I think we should dig into what this means for real estate owners, housing providers. Because one of the assumptions that's out there, and I heard it again this week. I was at an event. I spoke at an event. What was it? Last Thursday. Great event in Ajax in the GTA. Great event. Alfonso was there from Well Genius. We shared the stage again. It was a lot of fun. The point is that there's like, I don't know, 70, 80, 90 people in the room, all very excited and so on and so forth. But here's where it got interesting. They made the assumption that the renters right now, because the economy is having a tough time, they made the mental leap that if the economy is not good, that means the renters aren't good. Like, people are assuming that. And I heard it a couple times at this event. And I said, why do you think that? They said, well, the economy is no good. Therefore, everyone is struggling. Therefore, the renters are no good and no one's paying their rent. Like, literally, they made all those mental leaps in their own mind. And I said, no. I think, I then asked how much real estate do you actually own? Turns out it wasn't very much, if any. But the point is that people are making that assumption, Patrick. But the reality is I have never seen renters this good in a long, long time. This is, in fact, the best renters I've ever seen, Patrick, in many markets. And the reason is because they should be buying a house, but they're not. They're choosing to rent. Some of them are choosing to rent because they're scared. Some of them are not choosing to rent. They'd like to buy, but they can't qualify for a variety of reasons. We've talked about that before. Point is, there's a lot of good renters out there. If you have the right apartment and the right property that is premium and nice, you can go find those good tenants. So I just want everyone to know that it's not all bad news on the renter side.
No, you're right. And we've talked about this many times. So let's just slow down a little bit and really touch on what we need to kind of draw people's attention to, especially investors. Is we've said a long time ago that as affordability became problematic for those first-time home buyers, they are in fact going to become renters. We say, is Canada going to be a renter nation? But having said that, to the point that individual was saying to you that renters are bad, and I know, because we talk about it a lot, who is the demographic that you're renting to? So in other words, as a rental housing provider, as a business, treat your real estate investing like a business. Be very clear on who your rental market is, who is the demographic you're renting to, because that matters. And so when you look at some of the slowdown in different sectors, those are, certainly rental candidates who are going to be losing their job. So to that person's point, depending on the demographic, depending on who your rental demographic is, yeah, you may face some challenges. But along the way, what we do know is that first-time home buyers, the affordability continues to be an issue. So they are in fact renting. And to your point, there's a great cohort, a great demographic of renters, and the demand is high for great properties. So this goes back to what we teach and what we coach and what we tell people all the time. Maintain your property, have the relationship with your tenants, make sure that you're paying attention to how you're looking after them, especially in a down market like this. And this goes back, JG, to what we talk about often, which is we have to consider that our tenants are in fact our clients. So the clearer we are on who our clients are, the better we're going to accommodate them, the longer they're going to stay, and the better we're going to attract that particular demographic. So it is methodical, it is pragmatic. We have to think it through.
Now, here's Patrick. I know that we have a lot of stats on the market today and the meltdown and the so on and so forth, but I just want to give people a real kind of reality check on what's actually happening in the market today. And I think the best way to describe it, Patrick, and of course I'm talking in my markets, the markets I operate in, the Peterboroughs, the Lindsays, the Barries, the Aurelias, the Oshawas, the so on and so forth. I literally, Patrick, like an hour before the show, I was viewing a property, another off-market deal, and this person's looking for $595,000 for one of their properties. Beautiful little single-family home, $595,000, and yeah, there's no doubt that property has traded for more than that in the past, for sure. And I walked in, we were looking at buying this place, doing a conversion on it, and then adding a coach home to it. And I ran the math with the realtor in my mind, and I told him, I said, here's how I would do this math. And I was just taking them through the numbers. And I said, I'd probably offer, if we were looking at probably 525, 515, somewhere between 500 and 525, I could probably make this work. But 595, I can't make this work. And in chatting with them, they said, well, why is that? How come that worked for you like a couple months ago, or like 18 months ago, this would work fantastic, but it doesn't work for you anymore? And I said, this is why. It's because of the options I have. And just this week, I've looked at a multitude of properties, and I bought one for $475, and I bought one for $485, and I looked at another one for $450. So it's not that this property has just gone down in value because of the trade options I have. And it's the very same thing, Patrick, if you go to the store to buy a pair of jeans and all of a sudden there's all these jeans on sale, well, you're going to have the choice of your pick. You can pick any jean you want. It's very much like that in the real estate world today. And it's not, and this is what's important. It's not that the property isn't worth $595. Yes, it's worth $595, but it's not trading at $595 right now. And I think real estate investors in the stock market, this is very evident to stock market investors. The trade value and the value of the actual company, the value of the actual stock, like the value of the stock versus the value of the company. That's a very clear and concise concept in the stock market, but it's not in the real estate market. But frankly, it applies the same, doesn't it? And this is what I was explaining to this realtor, and they got it. They made sense of it, but it's the owners and the average person that I think is grappling with this. And it's no different than, Patrick, like it's no different than 2 years ago. I was talking to another guy. 2 years ago, a guy owns a condo downtown Toronto. He figures in his mind it's worth 1.5 million because his neighbors sold for 1.5 million, and today he wouldn't be able to sell for 900,000 if he tried. So the point is that, was it really worth 1.5 million, or was it just trading above its value? And I think that as a real estate investor, people have to understand this if they're going to make sense of this market.
The thing that we have to do in all of this is connect a bunch of dots. So JG, when you look at it, first off, all the headlines are being driven primarily about real estate are around the end user. So first-time home buyers, next-time home buyers, and how the market is really shut down. It has come to a place where it's a standstill, which is interesting because you've got no buyers, but you've got a lot of sellers. So listings are going up, but there's no demand. And why is there no demand? Because I mean, arguably, interest rates have come down. We'll see what happens in June. There's lots of conversation. Will they come down a little bit more? Bond yields are going up, so fixed rates are going up. The point is that the real estate market has stalled. There's a lot of inventory coming on, and we have to look at that from, if you're looking at it through the eyes of I'm an end user, so in other words, I'm going to live in that home. That's one way to look at it. But as an investor, here's what's going on. Listings are coming on, and there is no demand. In other words, there's no buyers. And I'm going to park the condo market. We're not interested in condos. We're looking at detached, semi-detached, duplex, triplex, or greater. And that market, by the way, is still there. They're not building any more. Like single family or detached building is way down because builders can't make the math pencil. Sellers, on the other hand, are waiting for offers and they're not getting them. So this is all to say, now's the time to go fishing and just start lowballing. Lowball, baby. I mean, that's what the game is because there's no demand. So JG, it's like that 595 that you were just talking about, and maybe that realtor is saying no, that the buyer's not interested in a lowball offer. Put a lowball offer in, and maybe it'll work. And if it doesn't, it doesn't. Nothing nothing ventured, nothing gained. The point is we're now getting into a market for investors who see a future, who aren't caught in the emotion of today because it is all doom and gloom and boom. There's buying opportunities, and it's just an interesting dynamic that investors go away.
And it's not only the sellers, Patrick. It's also and let's offer a little coaching here. If anyone's listening, they're a real estate investor, they want to buy a real estate. Now's a phenomenal time, and there's two reasons. One, the sellers, they're not all motivated, but some of them are very motivated. That's who you got to find. You got to find the motivated sellers. But here's the other people that are really motivated, Patrick, and we don't talk about this enough, but the realtors are motivated. And we don't talk about this enough because, at the height of the last, boom, you couldn't get a damn realtor to submit a lowball offer or I mean, if it wasn't like didn't check all their little boxes. I mean, the realtors were dictating the terms essentially. It's not like that anymore. The investors have regained some control. The investors have regained, that ability to negotiate the terms. And like for 595, and I told that realtor that I said, listen, if I was to send you an offer on this right now, I'd send an offer for probably about 460, 470 on his 595. Usually a realtor would be like, oh, no, don't even put it on paper. I'm not submitting that. Now they're like, yeah, put it on paper. Like, yeah, let's do it. Because they got nothing going on. So because they got nothing going on, they're open and they're willing. This is where the phenomenal deals are had. Now, Patrick, I feel like a broken record. Shit, I've been saying this for 6 months, but it's true. This is where the deals are had.
Well, and you make an interesting point, which is, so there's a lot of realtors that are not working right now and are looking for jobs other than being a realtor. The kind of the upper 5%, 3% of realtors who actually make a full-time living as realtors, they're still grinding it out, taking and working their database and looking for deals and trying to make deals. For those that were kind of riding the high of everybody is a genius in real estate, those realtors have gone and looking for jobs and trying to figure out how to pay the bills. They're part of the unemployment problem. The thing that is going to start to happen, JG, by the end of through 2025, we're going to see unemployment, particularly in Ontario and British Columbia, continue to rise. When we look at unemployment in Toronto, I think we're bumping or past 10% in Toronto property. And then you go out from there, GTA, and then out into the surrounding area, you're in that 7.5% kind of Ontario overall, I think. But the point is Ontario is going to continue to get hammered. And as we saw in the manufacturing jobs, we saw public sector jobs, but we saw a huge decrease in the manufacturing sector. And a part of that is the tariff issues that are happening. And what is Trump going to do? Are they going to be able to negotiate a deal? As we're at the time of this recording, we're waiting for Trump to make some kind of announcement of what he and Carney, some announcement that he got to, that he's kind of been very vague about. But the point is that those tariffs are having an impact on Canada as they are with other countries. Things are, in fact, slowing down, and we are going to find more motivated buyers coming out of the woodwork for investors to actually be able to capitalize on.
And let's be very clear, Patrick. The numbers on many of these deals is phenomenal. Even like what wasn't possible. Like let's really break this down, Patrick. And I think that it's important for investors to understand like the things that weren't possible 18 months ago are now possible. Like that's what happens in the real estate market. The reason I started doing ADUs, coach homes as we call them, at Visture, the reason we created the Visture intensification program is because we couldn't make duplexes cash flow as much as we wanted. So the only thing to do, if you wanted to stay in that asset category, was to add a third unit. And that's how we got into coach homes. Now, today, you can actually cash flow a duplex. You can cash flow a duplex on its own and do relatively well. Why? Because the entry prices come down, and that still gives you the opportunity to add a coach home and really kill it. I ran the numbers, Patrick, on a deal that I'm closing right now, and the duplex, the single family is cash flow negative. I think it's like $900 a month if it was a single family. As a duplex, it becomes cash flow positive. I think it's $254 a month. And as a third unit, okay, get ready. Hold on to your hats, buddy. If you add that coach home, you're cash flowing almost $1,700 per month. When was the last time you saw those numbers in Ontario? You tell me.
Well, it's been forever. And so, but that's a change in the market. This goes back to, real estate is still that hard asset that's worth owning and that I think people should own. We have to shift our strategy given what's going on in the marketplace. So there's some fundamentals that those 3 units, to your point, if you have one vacant, at least you still got capital coming in, you still got payments being made. The one concern that people are operating on top of, so let's just slow down a little bit. Investors are caught in what's happening today. Our job as investors to look 5 years down the road, 3 years down the road, 7 years down the road, and ask ourselves the question, do we see the current economic conditions continuing through that period of time, or are we actually being optimistic and saying, okay, well, this too shall pass. We're going to go through this particular cycle and come out the other side. These are opportunities to kind of build a portfolio, and then cash flow will only increase as time goes on if you look into the future and you can actually see that happening. The fundamental challenge that we face is that we're caught in the emotion of what's happening today, and it's very real. We're starting to see immigration numbers come down. That's a concern. Our renters, or those immigration, or the non-permanent residents, that number has been cut back. Student housing has been cut back. So those are a renter cohort that has been cut back, and we're starting to see unemployment go up. All to say this, when you look at the doom and the gloom of the economic cycle right now, this is where the buying opportunities are. The psychology is messed up, JG, because you're going to Alberta, we're going to Alberta this coming weekend. And Alberta, Edmonton's on fire. It's a boom cycle. Everybody's a real estate genius right now. Everybody's a real estate
interestingly, genius. Calgary's starting to slow down, isn't it, Patrick? Calgary's starting to slow down.
That. We talked about that a year ago.
Of course, that's what I'm saying. Like Edmonton. Remember a year ago you called it, and you know Alberta. You're Mr. Alberta, so you know Alberta better than anybody else. But Calgary was booming a year ago, and you said, guys, Edmonton's coming next, and careful, Calgary's going to start turning. And sure enough, it did, and that's exactly where we are today. And I found it fascinating. We got a great chart showing exactly what's happened in Alberta. And how those two markets, and here it is, Patrick, how those two markets really mirror themselves. So that the geniuses in Edmonton, guess what? Their day's coming real soon. Give it what? How long you figure, Patrick, until it starts to slow down? What do you think?
I don't think it'll be that long. I think it's going to be by the end of this year, we're going to start to see that. So when you look at that chart, Edmonton will mirror Calgary with a delay factor. So you see Calgary's market has come down, and you're going to see Edmonton do the same thing. I think about less than 12 months, we'll start to feel it. It is already starting to show signs of softening. And oh, by the way, JG, I got 4 frickin' vacancies in Edmonton all at once, all at the end of this month. Oh, am I ever happy about that? Anyways, the good news is I don't really have big mortgages on those. I might just pay them off. So we'll see what happens. The point is that we're feeling the slowdown in Edmonton, and Alberta overall is going to remain strong. But this slowdown that we're going to feel in Edmonton, and is like Calgary, is not going to be what's happening in Ontario or the Vancouver market. It's not going to come back to the same degree, but it will slow down. So here, that we talked about this when we were talking about Calgary. This is not the time. I don't care if you're in Alberta, Ontario, BC, doesn't matter. It's not the time to over leverage. Liquidity matters. Having cash available is important because we will see a softening in the market. So make sure that you're not over leveraged. That's the fundamental guidance. Make sure that you're getting great tenants.
That is so important, Patrick. That is so important. I've said it on the show before, and I've been talking to a lot of investor friends, and some of them have had a really rough 18 months. And when I look and when I talk to them and I ask questions about their leverage, their portfolios are levered 80, 85, 90%. I'm like, no wonder you were not set up at all whatsoever for a downturn. And I looked at my leverage the other day because I'm going through some refinancing stuff. My leverage on my portfolio is at 48%. I mean, of course I'm able to weather a storm because I'm levered really low, but we knew this was coming. Like, you knew this was coming. We talk about it on this show. We talked about this in 2022 for people to get ready because this is what the cycle does. And now we're telling people to get ready for the next, because after doom and gloom comes boom, and the good kind, Patrick. I know right now you're talking about a bad kind, but after doom and gloom comes boom. Now, is it going to come this month? Is it going to come this year? Is it going to come next year? I mean, we don't know the exact timing, but we know it's coming next because that's what real estate does.
Well, I think this is such an interesting time for investors who just stay grounded in the fundamentals of buying real estate, looking for the right deal, making sure it's the right property. You've got all the time in the world. You can put in some lowball offers, looking for motivated vendors, because at any given time, people run into family challenges, whether that's a job loss, a divorce, a death in the family, a transfer. There is motivated vendors out there all the time, and savvy investors will just methodically put in offers, look at properties, keep putting in offers, and ultimately that's the game that you get to play right now. So you change your strategy. And I have said many times, as a matter of fact, even a year ago, JG, I said, I'm very cautious about what's going on in Edmonton. I love the tertiary markets. I think those are really where the opportunities are. I think it's a safer play. I'll rephrase it. I think it's a safer play. If you're in Edmonton and you know the market and you're really methodical, really thoughtful, then okay, go and be in Edmonton. But I'm pretty conservative and cautious about what's happening, and I'm seeing it happening in Edmonton. So my guidance is this: if you're going to buy in Edmonton, great. Be very methodical. Think about cash flow. Make sure you're getting the right deal. Look into the future, location, etc., and you're good. Tertiary markets outside Edmonton, I think, are very good opportunities. And the one thing, but this, I'm going to jump to another province. The one province we're stepping over right now is Saskatchewan. And when you look at what's going on in Regina and Saskatoon, I don't have any charts on there, but do not step over what's happening in Saskatchewan right now. They're crushing it, and they're pretty strong. They're one of the stronger provinces, one of the stronger Western provinces. Again, so Alberta economically will weather the storm quite well. Danielle Smith is doing a great job of pushing back. You know, many people don't like her. I happen to think she's right on point, but we'll see. Time will tell. But I'm still very bullish on Alberta if you're buying right. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.